Futures trading involves substantial risk of loss and may not be suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Hope you all had a great weekend. Today is Monday, November 24th. Coming out of the weekend, looking forward to the holiday week, a shortened week. We have markets closed on Thursday, and then for the agricultural markets, an abbreviated session on Friday. They close about an hour early, so something to note there. You all can enjoy the back half of the week. And speaking of that, wouldn't be surprised to see some traders maybe hit the exits early and see some of that volatility come out of the markets, particularly in the grain markets this week. But to start things off, we'll look at the corn chart. A little bit of a choppy trade, both sides of unchanged from the open. March corn futures eventually ended up lower on the day, 0.75 cents to 436 3/4. As you can see here, we tripped stops below Friday's low. Wasn't really able to accelerate, closed back near unchanged, which is also just above trendline support, which we've outlined here over the last several weeks is a must-hold line in the sand. A break and close below there, I think, potentially opens up the door for additional technical weakness down towards these mid-October lows at 425.5. So this is a must-hold line in the sand. Probably end up being a quiet week, barring any headlines. So I really wouldn't be, expecting a whole lot out of this week's corn market. On the resistance side, though, the pocket that the bulls really want to get back out above is this previous support. Old support is now going to be resistance. That's at that 50-day moving average and just above that. So we're looking at 440 to 442. Right now, we are just it's kind of skating on thin ice. The bulls need to see some strength at some point here in the near future to negate the weakness that we've seen over the last 2 weeks in this chart, where we've clearly started to round out a little bit and mark lower highs and lower lows. Now, jumping over to the soybean market, January soybean futures ended up down 1 3/4 today, 11.23 1/4. And as you can see, just kind of flirting all day with that 20-day moving average, eventually closing below it, but still in that meat grinder box that we've outlined from a couple weeks ago. I really wouldn't be surprised to see this kind of stay in this choppy zone until we get new news. Market did get a little bit excited midday. Headline from President Trump stating that he had a call with President Xi, and they talked about many things, including soybeans and other farm products. That sparked the market a little bit. Soybeans rallied about 8 cents on that headline in the matter of about 30 seconds. Pretty decent volume, 4,200 contracts traded within that 1 minute bar, but 3 minutes later, we were back to where we started. So the market and the algo is kind of growing numb to some of the tweets regarding Chinese purchases of U.S. soybeans. The proof will be in the pudding. We did get some flash sales this morning from China, one flash sale, but largely to be expected. That's certainly good news that China is back in the market and willing to come back to the market. But to get out above here and see continued strength in the market, we're going to want to see bigger numbers and more consistent numbers to really propel prices higher. But again, the good news is that China is willing to come back to the market, which I think ultimately probably keeps the floor in the market. The big question, where is that floor? If we break below the low end of this meat grinder box, 11.12, 11.16, that opens the door for psychologically significant support near 11. And below that, you're looking at really the original breakout point in the mid 1080. So that's the downside risk here. Need to see those levels hold. And then on the upside, 11.35, 11.37, that's what the bulls want to see a closeout above to reignite the optimism to the upside. Looking at the chart here, you could make the case that this is the potential formation of a head and shoulders if we're not able to get out above that 11.35, 11.37. That would not be friendly. And then on the weekly chart, which we've been touching on for a while, really not a great look either. We've left some really big tails at the upper end over the last 3 weeks, and to me that screams that the market right now is rejecting higher prices. That's not great. But again, we do have a holiday week. Maybe we kind of fizzle out and just chop around here and then turn the page over to next week and we can get down to business and start to see a little bit more of an exciting trade on both sides of things in the soybean market. Now, over to wheat. Talking about exciting, this is about the last thing in the world when I think of exciting. Just a big technical breakdown really since the start of the month. when we got this high up at trendline resistance. We fizzled out there, and since then we've been marking a series of lower highs and lower lows, and today added to that trend. There is a little bit of support down here, 428, 430. There's a gap that was left from October 27th below that, and you're potentially looking at a run towards new lows. Hopefully we can hold that, but right now, if you're just ignoring the fundamentals and looking at this chart, not super encouraging at the moment. This is kind of one of those markets where I'd like to be optimistic, but there's technically no good reason to get super optimistic right now. I think it's kind of wait and see, wait for a better opportunity there. Now, the fireworks really came in the livestock side of things. We had the cattle on feed report on Friday. That was neutral to friendly, and I painted neutral as kind of more friendly than it probably should be because we haven't gotten a lot of good news since the last cattle on feed report, which was back in September. Unfortunately, that report was negated by the news of the Tyson plant shutdown in Lexington. And first and foremost, I just wanted to say how terrible that is for all those families and workers involved. My heart goes out to them, especially during this holiday season. Thanksgiving week, Christmas around the corner, and New Year's, just a really, really tough pill to swallow at this time of year for not just, the workers and families, but that whole community. Just really feel for what they're going through right now. But nonetheless, the market did take that as very, very bearish. We opened lock limit lower basically across all cattle markets, live cattle, feeder cattle. Didn't really see a whole lot of trade off of limit except for in some of the back months in live cattle. But the volume was actually really, really good. Across all the live cattle contracts, we traded about 64,000 contracts. So there is somebody that was willing to buy, whether that be covering shorts or people finding value. The volume was a bit of a silver lining. Looking at the options markets, the synthetics, they had April futures for live cattle trading about 3 lower at the close. And then for January feeder cattle, the synthetics, the options market was trading about 4 to 5 lower. At some points throughout the day, that was pretty darn close to unchanged, but definitely softened up into the close. It'll be interesting to see how we trade tomorrow. We do have expanded limits. So for live cattle, that's 1075 and feeder cattle 1375. But I expect to get some trade and not be expanded lock limit again tomorrow. Wrapping things up with the lean hog market. I moved the wrong thing. Not sure what I just moved. But we had a nice positive day. Again, this is kind of fool me once, fool me twice type of deal where you get a positive day in the lean hogs. Probably not something to get super excited about. Need to get out above this 50% retracement, which I just moved on accident. That comes in near 85. If the market can chew through 84, 85, I think that could potentially spur some additional relief in this market that has been in just a big downtrend really for the last couple of months. So that's what we're looking at to start the week. Again, if you have any questions at all, don't hesitate to reach out. Our trade desk is ready, willing, and able to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.